Coming up on Market to Market. Mother Nature reminds the country this is her time in the spotlight. China takes another step towards becoming an agricultural superpower. And the one exception to the old adage where oil and water don't mix. Those stories and market analysis with Tomm Pfitzenmaier next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, February 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Lower job creation and lackluster returns on Wall Street aren't helping the economy shake off the winter doldrums. According to Creighton University's 9-state Mid-American Business Index, the rural economy rebounded to 48.3 in January. However, this is the fifth month below growth neutral. Labor Department figures show the unemployment rate fell to 4.9% last month, the lowest in 8 years. Even as the level declined, only 151,000 jobs were created last month, well below what analysts say is needed to pump up the economy. And Commerce Department data shows exports fell 4.8% last year, the first setback since the Great Recession. The new information has some economists saying the R word. The lower economic indicators, coupled with lower stock returns, put Wall Street through a seesaw week as the Dow Jones Industrial Average finished on a low note. The metaphorical clouds over the economy were nothing in comparison to the physical formation seen across the country this week. An overcast day prevented Punxsutawney Phil from seeing his shadow, indicating an early spring. Nevertheless, the weather soothsayer's prognostication was based more on the fact he was under clouds produced by a weather system pounding parts of the country than any mystical power. Just one more reminder that winter isn't over. Paul Yeager reports.
This week, an old-fashioned winter storm blasted a region from the Rockies to the Great Lakes. Blizzard conditions were seen from Colorado to Michigan, and for a short time, interstates in Nebraska and Minnesota were shuttered. In Iowa, the snow was short-lived for some, but stuck around much longer for others.
Please get in the lines of 10!
The system held off long enough to give Iowa caucus goers and their candidates a free pass on Monday night. However, by Tuesday, the snow slowed traffic in rural and urban areas. Intellicast Observe Snow Depth map reveals a wide swath of coverage in the west, upper Midwest that continues into Michigan and Canada. And nearly all of the East Coast region, socked last week by nearly 2 feet of snow, spent the week watching tall drifts melt away. South of the snow belt, the extreme weather took a different form. This twister hit the town of Aliceville in western Alabama. Homes, businesses, and power lines were in the path of the weather event. The same complex of storms also produced tornadoes in Mississippi and Georgia. This week's drought monitor reveals consistent rain has erased many dry areas. The only extreme situation remains in California, but even there, the pattern of parched conditions is weakening. The last 2 weeks have seen the lowest levels of drought in the U.S. since August 24, 2010. Even as El Niño storms have drenched California this winter, the state's water regulators voted Tuesday to extend the emergency water conservation measures. And Californians are still being asked to reduce water use. The governor's call for 25% conservation was not met last month for the third straight time, but state officials still believe the Golden State will meet its long-term goal. For Market to Market, I'm Paul Yeager.
Under milder conditions, the 12-nation Trans-Pacific Partnership was signed in New Zealand this week. Chances for American entrepreneurs to take advantage of the treaty remain small due to opposition in Congress, which still needs to ratify the agreement. With the ink barely dry, China's state-run ChemChina made a $43 billion cash bid for Swiss agricultural giant Syngenta. Of late, China has been securing its food supply with large worldwide acquisitions. No one understands big risk, big reward better than the oil industry. Low prices haven't prevented every drop of profit from being squeezed out of their investment. And as producer Josh Bittner found out last fall, the byproducts of oil exploration can be a blessing and a curse for agriculture.
It was sterilized. There was no vegetation whatsoever.
Their livestock have grazed the high plains of eastern New Mexico for generations, but the domestic energy boom of the past decade has some ranchers saying, there goes the neighborhood. Since Carl and Justin Johnson lease grazing land from the state, the cattlemen can't prevent oil companies from drilling there. And the side effects on the land have been disenchanting.
They just don't give a damn. The oil companies, they could do what we ask them to do, and it wouldn't even make a blip on their expense sheet.
5 years ago, a ruptured pipe released 420,000 gallons of oil field wastewater here. The salty byproduct killed off vegetation, leaving the acreage desolate. The accident was just one of dozens the ranchers say they've endured, spending tens of thousands of dollars trying to rein in oil and gas drillers for alleged practices that can kill wildlife and threaten freshwater supplies.
See over there, this is all saltwater disposal leaks.
An Associated Press analysis of data from leading oil and gas-producing states found over a 6-year period 180 million gallons of wastewater, or brine, was discharged. And while oil spills capture the most attention, brine can be more damaging. In the AP study, several cases recorded wastewater levels double those of oil.
Brine spills are a huge issue. Anywhere that you have oil and gas production, you're going to have releases.
Soil experts say oil is eventually absorbed via natural processes, but salt-saturated ground dries up, kills plants, and prevents new growth.
Basically, that land that's been impacted has been taken.
It will recover, but it'll probably take about 5 years before we start really growing anything right in this area.
In Texas, the country's top oil-producing state, soil tainted by brine spills in 2012 is finally showing signs of life.
The pipeline ruptured over here. It flowed through the terrace system out into my field, and then it started draining out of the field, and then the salt stayed on the surface to a certain extent, causing the damage out here.
Meanwhile, in drought-stricken California, the Kern River oil field churns out $15 billion in annual oil revenue. Kern County is the #1 oil-producing county in the nation, and the Golden State's oil industry faces scrutiny for its use of natural resources.
Primary use in the water in the oil industry is to generate steam. Most people think it's a pool, but it's not. It's in the sand. Put a little steam in it, drive it through the sand, and so that increases your production from 25, and some people say they can get 65% of what's down there.
Kern County could be called a case study of how sometimes oil and water do mix. Unlike fracking, which uses water, sand, and chemicals to flush oil to the surface quickly, steam injection coaxes sluggish crude out of the ground. But oil isn't the only commodity on tap.
When they pump oil, the oil is down in the formation. It's oil and water. And so when they pump the oil out, they pump out 1 part oil, 10 parts water.
The problem is what to do with all that water. It can be injected at high cost below existing aquifers. Or, as in the case of Coelho Water District, oil field water can be cleaned and blended with other sources to provide desperately needed irrigation water.
It's a lot cheaper, and we'd be missing out on a lot of water, especially in a year like this. It's half of our supply this year. So if we didn't have this water, we'd be pulling crops out. and farmers would be going out of business.
For over 20 years, the utility, serving roughly 90 farmers on 34,000 acres outside Bakersfield, has brought water from the area's top oil producer into agricultural use. Chevron Corporation uses gravity separation technology and walnut shell filters to remove as much oil and impurities as possible. The resulting produced water is delivered via pipeline to Coelho Water District, where it is cleaned again and mixed with existing water. The extra 65 acre-feet per day provides insurance, while regular sources taper off from drought.
What this project does is it reduces our pressure on the Sacramento-San Joaquin Delta, and it's also reducing the draw upon our groundwater.
Coelho's end product is tested by the state. But recent media reports implied findings by environmental activists showed the water and food grown with it might not be safe.
The sodium is around maybe 140 to 160 milligrams per liter. Most agricultural products like it less than 160. So we blend that down and get it down to good irrigation quality. It does have some other chemicals in it, but they are well below the drinking water standards.
Chevron refuted the negative reports, which the oil company discredited through scientific testing of its own. But California's Regional Water Quality Control Board is collecting data independently to verify the information. And both Chevron and Coelho are eager for the agency's report.
We're waiting for the state to really come out and give us that clean bill of health.
It's safe. I don't think you would want to drink it every day, but we haven't seen any problems with our trees. There's trees and vines out here that's been here for many, many years using that water.
Roy Perucci manages an 80-acre pistachio farm in Coelho Water District. He says produced water from Chevron has been a trusted source for his operation, which uses 100 million gallons of water per year.
You're never going to find a risk-free form of energy, whether we're talking renewables or fossil fuel development.
Oil byproducts have been both blessing and curse in rural America. And fossil fuel advocates say even though domestic energy production is up, wastewater spills, by proportion, are down.
The men and women who work in the oil and gas industry are absolutely committed to spill prevention. They live in these communities. They want their environment to be preserved as well.
Oil companies pay to clean up spills, but it's the law in most states. And even though the threat of wastewater hazards can be mitigated, these New Mexico ranchers fear the land will never be the same. For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The grain markets were lower as traders positioned for a potentially bearish WASDE report next week. For the week, March wheat lost 13 cents, while the nearby corn contract fell 6 cents. Another Chinese cancellation and the start of a buying shift to South America pressured the March soybean contract 15 cents lower. March meal also felt the pinch and fell $7.40 per ton. In the softs, the March cotton contract continued to decline, losing $1.16 per hundredweight. Over in the dairy parlor, March Class 3 milk futures bumped up 7 cents. In the livestock sector, the April cattle contract gained 40 cents. March feeders fell $3.42, and the April lean hog contract lost 40 cents. In the currency markets, the U.S. dollar index dropped a whopping 2.5%. Crude oil ended its comeback as the March contract declined $2.73 per barrel. COMEX gold gained $41.30 per ounce, and the Goldman Sachs Commodity Index fell just over 11 points to settle at $289.85. Here now to lend us his insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
The big story from Wednesday through Friday of this week was the dollar index. Huge drop downwards. 2-day move, one of the biggest we've seen in quite a while. Tell us a little bit about what happened. What prompted this large sell-off?
Well, I think there'd been an expectation after the December FOMC meeting. The Fed had indicated that they're going to have 4 interest rate increases this year. So, that magnified that interest rate differential between the U.S. and pretty much every other country. Well, now all of a sudden, maybe there's a little more uncertainty about whether that's actually going to happen. There were a couple of Fed officials came out this week and said they're not sure that needed to happen. And I think you had the market a bit overbought anyway, and then this just sort of had everybody trying to run out the door at the same time. I don't know. It's really going to depend on what the Fed decides to look at and what they think is important. If this unemployment number at 4.9% that we had on Friday morning, supposedly unemployment is one of their data points that they watch. You've got wages starting to creep up a little bit, which should be a positive. So I think it's up in the air. And you saw the dollar bounce back because of that quite a bit on Friday. So I think that's kind of what it's going to boil down to. I still think the dollar is going to be king, and certainly is going to benefit relative to most every other currency. So I expect it to be well supported and to bounce back up into that $99 to $100 level at some point here.
Gotcha. In the interim, before we get more news from the Fed on whether or not they're raising rates, is a 2.5% drop in the dollar enough to make U.S. wheat competitive or more competitive globally?
I guess you could always say more competitive, but I don't think it's that competitive.
Okay.
I mean, you got French milling wheat being sold at competitive prices with corn. French farmers have got wheat stacking up. They got another crop in the field that's coming on strong. There's just plenty of wheat around the world. As you said a second ago, wheat prices were down again this week despite the weakness in the dollar. Yeah. Well, actually, none of the grains paid any attention to that weakness in the dollar. So I don't really know that there's a real great correlation in the short run for that.
Do you expect to see wheat prices to rebound here? Are we getting close to maybe a bottom in this market?
No, I think they just rolled over, actually. Most of the indicators I look at just kind of topped out this week. So I would expect to see more pressure. Well, I'm not necessarily saying we're going to make new lows, but I think we're probably going to pull back a little bit more, especially after this week close this week.
Okay. As we take a look down at the corn market, I want to talk old crop corn first. We've still not seen a whole lot of farmers selling. Are we waiting on a rally that could yet materialize? Do you think there's still chance here in the next couple weeks, maybe from...
There's always a chance, Mike.
Next week's report going to give us some
there's
fire?
There's always a chance.
Well, yes.
I don't know what there would be about that report that would be friendly, but I suppose there's it seems like a lot of these farmers have their eye on 380 basically 380 March futures or whatever that means for their local cash market. And I just think that's going to be tough to get to. You got up to 373, 373 and a half this week, and it just didn't have any more go in it. And you look ahead of that report next week that you alluded to, export sales, while they were decent this week, are lag way behind. It just increasingly looks like the USDA is overstating that by 50 to 100 million. They may even be overstating the feed and residual number by a little bit. So I don't know what they would say that would be bullish. So I guess I will be surprised if it's up.
Okay.
Unless we beat the heck out of it Monday and Tuesday, and it's kind of on its lows when it comes out, then maybe it
might get a bounce.
But as far as making new highs because of it, I guess I'd be surprised.
Okay. Well, now we have moved into February, so we are getting ready to set crop insurance prices this month. And we've got a question here from one of our Twitter followers. And you can find us on Twitter at Market to Market or on Facebook at IPTV Market. Please look us up and send us your question. This one's from Glenn in Ohio. He's asking, what fundamental news or technical indicators should we watch during February price discovery period for crop insurance? What should farmers keep an eye on?
To be honest with you, I don't think new crop corn's gonna do a whole lot. I think you're gonna end up with a number right around 390 for your crop insurance February price, and I don't know that there's all that much to watch. We could bounce up to 95, 96, 98, something like that. We could drop down to 85, but I think by the end of the month, we're going to be pretty close to that 390 level.
Okay. Aggressive selling at 390, or do you wait and see what crop insurance does, then market higher once that number's out?
Well, that's certainly your base. I guess I still think you start selling at just under $4. 398 is probably where I'd be would be putting orders and then scale up from there, hoping to get some kind of a weather concern or planting delay or whatever that bounces us up a little higher than that.
Okay. Well, now let's look at the soybean market. Just like wheat, down 14, 16 cents on the week. Do we have some upside coming in the soybean market?
Well, we had some upside because of weather concerns. It had a little dry patch in Argentina that had them excited, and then this Chinese cancellation came out. We got terrible export sales because of that this week. The expectation is we could have more cancellations because there's a fair number of beans that haven't been shipped yet. So some of those could be canceled. And as you also alluded to earlier, the demand's shifting to South America. And the other thing is meal exports were terrible. So you got meal backing up. The Chinese aren't taking our DDGs like we thought they were going to, so they're backing up. So there's a good possibility the USDA is overstating crush too, that the crushers are going to have to back off a little bit. So I think in the long run you could see a 25 to 50 million bushel adjustment downward in demand, which would push our carryout up in that close to 500 million bushel area. Now I'm not saying that's necessarily going to happen Tuesday, but it's over the next 2 or 3 months, I think it's going to.
It's potentially in the cards.
Right.
Given that's the case, how do producers market these new crop beans? I mean, you're not painting a very pretty picture here, Tom. Are we going to have a chance, even on a weather market, to get a big enough spike to make some sales?
Well, you can make sales anytime, Mike. That's not a problem.
above break even at fun levels.
I think you're going to see sub $8, probably 7.5, maybe 7.25 new crop beans at some point. So to me, $9 looks like a pretty good place to start getting. Again, I'm tucking orders right under that at $8.95, $8.98, something like that. And then if it goes higher because of planting delays or a little harvest problems in South America or whatever, add to that, but start that as your scale up point and hope you can add to it.
Okay, all right, but at this level, maybe look to make some sales.
Yeah, there's a heck of a lot of beans in the United States. We're going to plant more. The South American crop's huge. They're going to probably plant more because the drop in the real and the peso, their farmers are getting all kinds of money for their crops. Well, why would they not plant more? So, I mean, everybody bouncing around here hoping for these big rallies in beans. It just doesn't happen when you have a lot of beans around in the world.
Fundamentals are bearish soybeans.
I mean, there's always the possibility that we're going to burn up this summer. It's going to be 100 degrees in July and August, and El Nino is going to end, and La Nina is going to come in, and everything's going to get fried. So you can't say never.
Right.
But if you're playing the odds and you're probably going to have trend line yields, that's probably what's going to happen.
All right. Well, now let's talk cattle market. A little bit of positive news, up 40 cents on the week. Strength to move on to next week, Tom?
Boy, I'd like to think so. I guess I was a little disappointed this week that cattle didn't trade really till, if at all, late Friday. I thought that snowstorm Monday and Tuesday, they'd be out there trying to get their hands on cattle, and nobody really seemed to care. So I'm hoping next week's a little better than that. I'm a little concerned because some of the technicals have rolled over there. I guess I had an expectation that maybe we could get April cattle up in the 136 to 140 range someplace, and it barely touched the bottom end of that range. I guess I'm still holding out hope that we will be able to do that, but it really wasn't a very good close on Friday.
No, something to keep an eye on for next week. We're going to need cattle movement to give it some legs.
Yeah, and the products picked up a little bit, but it's a similar situation really to what corn and beans are, in that you've got a lot of meat and beef and cold storage. So anytime you rally up, you've got that product sitting above the market that gets moved in. So it's kind of it locks us in a trading range for sure.
Okay, feeder cattle off 350 this week almost. Are we on a downward trend here through spring calf sale season?
Probably, although I don't see the bottom falling out of that market here, I guess, as long as if grains drift lower like we think they can, and the fat market stays up in the levels I talked about earlier, I don't see a lot of reason for the feeder market to sell off hard.
Okay.
But yeah, the tendency is probably going to be for it to work lower over time.
Okay, down into the 40s, 30s, I mean lower over the next year.
Yeah, exactly. Yeah.
Okay. Pork market down 40 cents, still very resilient given the number of hogs out there. What does that tell you?
It really is. We had really had good export sales. That's one that seems to benefit a little bit from the weakness in the dollar more than anything else does. I don't know. I guess I still think you get the front months up above 70 and the summer months up above 80 to 82. You probably better start taking advantage of that to some extent. But I don't see that market falling off. It's kind of an interesting, what I think I read this week, the average beef price in retail, you know, all the 15 cuts or whatever is 5 1/4, pork's 3 and poultry's around 2. So beef is really having trouble competing against those lower 2 price meats. And I think really the pork has been a beneficiary of that lower price.
And so you think we can, even with these larger numbers, lower prices will continue to move this product out to the consumer?
Yeah, and you move into Easter, you know, that ham season, so you got that big chunk of demand. I don't really, it's hard to get real negative on pork, and it's certainly nice to see the way it's bounced back here over the last couple months.
After that drastic sell-off in October, had a $20 rally almost.
I know.
Very exciting. Well, Tom, thanks for taking the time to join us this week.
Thanks, Mike.
Appreciate your insight. That wraps up the broadcast portion of Market to Market. But Tom and I will continue our discussion and answer some of your questions in the Market Plus segment available on our website. While you're there, do check out our social media outlets and interact with us. We love to get those questions on the air so we can ask our analyst and get you a great answer. And join us again next week when we'll examine how new mining prospects up north have dug up local opposition. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.